For those of you who don't know me, my name is Kelly Higdon. I'm a licensed marriage family therapist in California. I am the other half of Zinni Me with Miranda Palmer, and we are glad you are here. So Mary Beth has a whole bunch of information planned. There probably will not be time for Q&A because there is so much information, but that's okay because this is where it all starts. And just so you know that this morning, information had already changed, like within an hour of like me waking up and another thing had changed. So we're just going from what we know right now, and we know that things are going to continue to evolve from here. All right, so let's get started. What the heck is happening with all this emergency relief stuff? Okay, you guys, this is Mary Beth, certified financial planner for Workable Wealth. Oh my goodness.
Well, no, but they knew that. They heard you. They couldn't hear me though, right?
I know, but I'm just reintroducing again since so I didn't add you to the stream.
This was my wine that I showed you all, by the way. I was just saying. So this is my wine. Hi.
Hi. Okay. So let's talk about what's been happening. What is this CARES Act? And, you know, what makes it unique?
Yeah, so I'll start over. So in general, I was saying I had wine because the stuff is very dry and in terms of the content, and it's not terribly exciting, but it's important. And so the CARES Act specifically today, I can sick myself twice now and it's going to, whatever. So the CARES Act, we're going to talk about mostly the small business owner loans. So how, like the things that are available to you and what you can take advantage of. So we can dive in. Do you want to just dive right into, like, we'll start with the $10,000 grant one, and then we can go from there.
Well, how many are there?
There's 2 loans.
Okay, so
there's 2 loans that we're going to talk about. There's some other things that like don't really apply to this audience. I don't think that we need to dive into. So the 2 loans are the things that are being talked about the most probably by anybody.
Okay. All right. So why don't you start with the Paycheck Protection Program?
Okay. Can we start with the other one first? Because that's the smaller one.
Sure, do that one first.
Okay. 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 So let's talk about the Economic Injury Disaster Loan. So there's lots of acronyms here. And so it's EIDL is how people are referring to it. So the EIDL is the one. So the Economic Injury Disaster Loan is basically the first line of support. It's the one that's coming up where people are seeing the $10,000 grant. These loans in general are not new. They've actually always been available in the event of a disaster, but this is the first time. Also, did I mention that I have children? And if there's yelling, sorry.
I forgot to give that disclaimer. We are all working from home, yes?
Yeah. So.
I have a child at home. Mary Beth has 2 littles at home, and there's someone sewing masks in my house. So there is, there may be screaming or crying, but we all have another parent in the room with that child. So if we ignore it, it's because we know our kids are safe. Yeah. Okay.
He's fine. He just 2-year-old high-pitched screaming. So that's the new thing as of yesterday. Okay. So the EIDL, basically what makes this unique situation is they've always been around, but this is just the first time a virus or pandemic has actually been labeled and defined as a disaster. So that is what opened up the use of these funds. So now the EIDL is what has already been open for a while for the week. I think they opened as of Monday, the 30th. And they're for small businesses, self-employed individuals. And they're unique because with the loans are up to $2 million. You can get a term of 30 years to pay them back. Whereas like the payroll one is, payment one is 2 years. So up to 30 years. Interest rates are 3.75% if you're a small business and 2.75% for nonprofits. And your first month's payment is deferred for a full year. They're unique because when you go in to apply, you apply for this on the small business, the SBA's website. I think it's like SBA/disaster is where the application is. It takes you like 10 minutes to actually get through if you have your numbers organized. They're unique because on there you can check a little box that says like, I have an immediate need. I would like to request a grant of like up to $10,000. So you can basically request a $10,000 cash advance, and it's a grant. So you can request the cash advance. And then even when you get it, depending on what you get, like they could still even deny your loan, but you have that $10,000. Like that's yours and you don't pay it back. So that's go ahead.
Let's just clarify a grant versus a loan. A grant is free money and a loan is something you have to pay back. So you need to be sure on that application. There's a box, it's in big letters. You click that you're requesting the $10,000.
Yeah. And so a couple of questions I've gotten on the application is, for the cost of goods sold, Your service-based businesses, so you very likely, and like the CPA that I work with, like zero for cost of goods sold. We're not sure how it's being utilized right now, like the application or approval process, but you're going to have zero as that answer. And then unless you are a nonprofit, there's a section for nonprofits. Don't complete that one as well. So the EIDL is basically, it's gotten big right now because it's for smaller businesses. If you have an immediate cash need and you are low on funds, that is that $10,000 grant. Like that is supposed to get money into your account supposedly within 3 days. But we have people who applied on Monday, it's Friday, and they still haven't gotten the funds. Correct. So all of this again is like, I feel like these are very rough guidelines as to what's supposed to happen, and people are still getting their acts together behind the scenes and figuring it out.
Yes.
But those are, I mean, that's basically it. Like the approval, you get approved based on your credit score. A bankruptcy doesn't defer you or disqualify you from getting a loan. But that's basically where we're just going to focus on that $10,000 cash grant right now, because that's the big thing that people are focusing on. So that's the EIDL. And then we can go into the PPP now as well.
Okay, so just to recap, the EIDL, you can get up to a $10,000 grant. We don't know when those disbursements will happen because they currently aren't happening on a timeline, but that is because of the high demand. But as service providers, you can apply for this. It can give you a cash injection when you do get that cash. And what I recommend and what I've been recommending my clients is pull that tax return if you have from 2019. It has your gross that you need in there. It has the cost of goods sold, which, like you said, Mary Beth, for us is generally zero because we're not selling physical goods. So it should be, so the 10K is a grant, and then you could get more in terms of a loan if you need that.
Correct.
Yes.
Yes.
Mm-hmm. Yeah.
And so, so we have the EIDL. That's the applications are open there. Paycheck Protection Program is which I keep calling Payroll Protection Program, whatever. All of the acronyms. That is the one that is getting a huge amount of focus right now. Everybody is kind of like panicking, spinning up around and trying to figure out what to do. Basically, do you want me to start with jumping into like what they are, what it does, or do you want me to target anything specifically?
No, just go ahead what they are and what it does.
Okay. So in general, any company that employs 500 people or fewer can, be eligible to get the loan. You can use the loan for certain qualified costs, including payroll costs, which are, includes your payroll, your vacation, parental, family, medical leave, sick leave. You have payments for your group healthcare insurance. You have retirement benefits. That's all included in payroll. And then you also have your compensation, your utilities, rent, interest on mortgage payments. Those are all things that need to have been in service before February 15th, 2020. So you can't like get a loan and then go get like new internet service and try and pay for it. Like that's not how it works.
Right.
The maximum amount of the loan that you can get is the lesser of $10 million or 2.5 times. So if you qualify for that one, we're in the wrong place. Okay, so $10 million or 2.5 times the average total monthly payroll that you've had over the 1 year period before the loan. So this is one that's gotten a lot of different information. So we're talking 2.5 times your average monthly payroll for the year before the loan. A lot of people have said like, oh, that's 2019. Now the new guidance that's coming out is like, actually that's the 12 months prior. So you're talking April 1st, 2019 through March 31st, 2020. So if you don't have your books done yet, you want to get them done. And talk to
Greg's been very busy.
Talk to Greg. Let's talk to Greg about finishing your books.
Yeah.
But that's the period. So 2.5 times that amount. So let's spend some time digging into that and what that means, because I know we have different business structures in this group. So if you are an S corp and you happen to be on payroll, one of the things that's interesting is like as a financial planner and accountants, like your payroll, we always try to keep that lower for tax purposes, for payroll taxes, and we have you have higher distributions. If you have any type of payroll at all as an S corp owner or a business owner, that is the only thing that will account for your loan. So if you take a salary of $30,000 a year and you have distributions of $50,000 a year, your loan amount is going to be based off of 2.5 times your monthly payroll for the $30,000. That's how much you qualify for. Not those distributions. Yeah. If you are a sole proprietor or a single member LLC and you do not have yourself on payroll, then you're looking at just your net income. right? Because you have no payroll to look at. So then you're looking at your average monthly net income, which is, again, after your expenses, what's left over. That is what will be used to calculate the amount of loan that you qualify for. So those are the two differences there. So just kind of thinking about, when you think about it, if you apply for the PPP program and the EIDL program, you can apply for both. But if you get the $10,000 grant, if you're looking for just like straight up free money, if you apply for the EIDL program and you get the $10,000 grant, and then you are applying for the PPP program as well, and you're looking for loan forgiveness over there, and you get a loan that's going to be $9,000, you're not going to be able to get both forgiven. Like you'll owe, like that takes away from what you can get forgiven. So if you have $10,000 forgiven over here and you owe $20,000 loan in PPL, you're going to have to at least pay back $10,000 of it. So basically, you can only get funds to cover, like you can't get a loan from each place to cover the same thing, right? There's no double dipping, if that makes sense.
No double dipping.
No double dipping.
We learned that in kindergarten.
Yes. So that's the biggest thing I think for this group to keep in mind is if you're looking for just straight up free money, it might just be the grant for you is the thing to, I'm calling it free money, but the grant is probably going to be the easiest thing for you to access. And then you won't have to pay that back versus going to the PPP program. It's lower. You're going to end up having to pay some of that money back. However, the interest rate on the PPP program is it's low. It's 1%. So it was going to be, we got guidance of 4%. It was 0.5% until yesterday evening, and then it's 1%. So as of now, it's 1%. And that's what the interest rate will be on the loan. So whether or not the loan is forgiven, because that's a lot of people are talking about these loans as they're looking at it for forgiveness. Whether it's forgiven or not, 1% is a pretty low interest rate. And so I'm basically saying, like, if you need money, and you need the money one way or the other, and it's going to be forgiven or not, 1% is a pretty reasonable interest rate to have for a loan. Right. So I'm saying to get it at this point in time for this audience, like just get the loan. It's 1% interest. Whether if you could put it in a savings account, if you don't need it, you're paying 1% just to have the emergency cushion there. You could pay it back at within 2 years. There's no prepayment penalty, so you could pay it all back at one time if you decide you don't need it. But if you do need it, it's 1% interest rate. So that's the kind of parameters. The thing that is coming into play, and just tell me if I've already talked about this because I've done a couple of these today. So just cut me off.
I know you've been busy.
But is the unique aspect of the banks that you apply through. We didn't talk about this yet, right?
No.
So banks were supposed to open today to the PPP. So the question, and we look at questions. I get distracted. Okay, I'll answer questions if Kelly tells me to answer questions. Sorry, guys. The PPP will it will need to be paid back if you're using the funds for anything that's not payroll oriented or utilities, rent, etc. So basically 75% of the loan proceeds need to go towards paying payroll. 25% of it can go towards rent, utilities, interest on mortgages that were in place before the loan date.
Wait, okay, so this is the PPP. I just want to say it one more time. For the PPP, when you get that money, 75% of it has to go to payroll. 25% can go to expenses, like
up to 25%. So I don't, So.
Yes.
Yeah, you can use it all on payroll. All on payroll is great. Like use it all. I mean, the whole incentive of the PPP program is for you to keep your payroll going, to keep people employed, for you to be paying salaries so that they don't have to go to look for other benefits. Like the goal is to keep jobs in place.
Yes.
So for that, and then let me know.
That is for employees, not contractors.
Correct.
Payroll is employees, not contractors.
Your contractors do not qualify. So if you have somebody that you're paying a contractor, they do not apply. They do not qualify to the loan amount. So that is that guidance was definitely confirmed last night. And do we have group practice owners in here? Do you want me to talk to that for a minute too? Okay. Mm-hmm. So let me talk about the bank issue, and then we'll talk about the group practice owner issue as well, because I think that's one of the things that I know is coming up. So the issue with banks right now, banks are supposed to open April 3rd for applications. As of right now, there is as of a couple hours ago, Bank of America was the only one that I knew that was open and taking applications. And they were taking applications only if you are an existing business bank account, have an existing business bank account with them, and you have a business line of credit, and you have to you have a credit card or a line of credit with them. So you could be a business and have your savings account there or checking, but if you don't have a line of credit, they're not letting you apply. So this is the issue that we're seeing with banks right now, is they are prioritizing their customers first. So they're prioritizing the people who are like, there's people who are top of line. They're going to prioritize them. And then after that is when they may open up to other people to get into line. But as of right now, some of the banks like Chase, Wells Fargo, like they weren't even open yet. Like, I mean, they haven't even started accepting applications unless you got an email.
Chase lets you fill out a form and then they say, we'll call you.
Oh, so great. There's a step,
not
right?
Even an application.
Was that as of today though? Was that as of like this now? Because there wasn't one. Okay. So that's
yes.
Yeah. So it's pretty, every bank is kind of, the biggest issue is like these guidelines have been a little loose. It's a little bit like the wild, wild west of lending right now. And so banks, the way it works, banks have to have incentive to loan money, right? So 0.5% interest was pretty low for them to like go through all these hoops and take the risk. And that's where the 1% has now come into play. Still, it's a low return for the banks. And so for them to step up and do these things, like it's basically they're looking at their customers first. And so if you are looking for a bank of where you should be applying, you want to start with your existing bank. They're going to prioritize their customers first. And then from there, you can also look at the SBA has an online lender match tool. You can go there, and I'm going to share these websites and resources with Kelly and Miranda after this. So it'll probably be Monday that everything will go live, but I'll make sure to share like all my notes and websites. So SBA, their online lender match tool. There is a small business development center and then a women's business center as well. Like those are places where you can figure out which banks or credit unions or which places are offering up these loans, and then you can start there.
Mm-hmm.
So let's see. We talked about the business. I wanted to go back to the issue. Hang on, let me find the repayment stuff. So for the forgiveness, and then we can go. So the deadline for applying is June 30th, 2020. So the issue is like there's only certain funds, right? There's this whole fear that they're going to run out of funds. And that's why everybody's trying to make a run on these programs right now. The deadline is June 30th, 2020 for application. You want to get in sooner. But one of the things we're kind of talking about internally with our company is like, if you get in sooner and you're one of the first ones to apply through your bank and they don't have their stuff figured out, like there could be an application, there could be a chance that your application fails because they don't have their stuff together. So you want to, it's 3.75 for EIDL. Mm-hmm. And so you want to make sure like, you want to like be front in line, but you might not want to be the very first person to apply because you don't know. You want to like let other people like be the test first if possible. So get yourself like, like maybe like 5-10% go in front of you and then get in line when you kind of feel a little bit like stuff is settled down and there's not new things coming out every day. Because as of right now, I've been like living on Twitter, which is where all of the stuff is released. And it's just like an onslaught for our industry. And it's like this new thing came out and this new thing came out. Right. And it is, so you guys are like panicky, but like we're trying to like dive into this. And like our industry is like, like these things are conflicting. They don't make sense. So, right. So know that. So June 30th deadline. What counts as payroll costs? We talked about that. I want to talk about for the forgiveness, and I want to talk about the issue that I'm seeing with this industry. Okay, so I'm just going to read this word for word, and then we can dive into it. So how much of my loan will be forgiven? I'm just going to read this out. So you will owe money when your loan is due if you use the loan amount for anything other than payroll costs, mortgage interest, rent, and utility payments over the 8 weeks after getting the loan. Due to the likely high subscription, it is anticipated that not more than 25% of the forgiven amount may be for non-payroll costs. That's what as I mentioned for the other areas. You will also owe money if you do not maintain your staff and payroll. So number of staff, your loan forgiveness will be reduced if you decrease your full-time employee headcount. Level of payroll, your loan forgiveness will also be reduced if you decrease salaries and wages by more than 25% for any employee that has made less than $100,000 annualized in 2019. So I don't know if you know, I didn't mention the $100,000 cap, but there's a $100,000 cap on your income as well on the salary. And then rehiring, you have until June 30th, 2020 to restore your full-time employment and salary levels for any changes made between February 15th, 2020 and April 26th, 2020. Okay, so the biggest issue that I'm seeing with group practice owners is you're paying clinicians based on their caseload. So if their caseload drops by 25%, the income goes down, like you might not get forgiven. And the only guidance I've gotten so far from CPAs is like it could be prorated. So if it drops, then it picks back up. Like it could be a prorated forgiven amount. But that's the question. You definitely want to be working with your CPA closely on this. And for group practice owners, and same thing if you've like reduced hours for any admin staff. But that's the part where I'm seeing this group is probably going to get impacted for the forgiveness is caseloads go down, the wages are then going down, and that's going to impact your ability to forgive. But knowing that, I want to go back to what I said is like, it's 1% interest on the money. So it's still cheap access to money to get. So I still want you, even though you don't know if it'll be forgiven, it's still a very low interest loan. So I would still encourage you to apply.
Especially from the aspect of, we want to try to keep people employed. First of all, when this does blow over, we are anticipating a huge blow up of need. And so we want to be contributing to the health of our mental health community and the financial health of it. So if we can keep people employed, then it's worth it, you know, in that sense.
Correct. And so I want to go back to what I don't think I touched on this yet, because I've hopped around a bit, is that salary, wages, and commissions are capped, and tips are capped at $100,000 on an annualized basis. So if you, for example, are on payroll through your company, it's doing great, and you're paying yourself $150,000 for a salary, you can only include up to $100,000 of your payroll in that loan. So it doesn't just, there's been talk of like, it doesn't include anybody who makes over $100,000, but that's not true. It's up to $100,000 of that income is included. So same thing if you have other members of your team that are earning more than $100,000, only up to $100,000 is included for the loan. So you can't include more than that when you're calculating how much loan you'll receive.
Mm-hmm. Yeah.
Okay. And then, so the loan, you can request basically, so for the loan to be forgiven and like how to get it forgiven and when it is forgiven, you can request, it is forgiven basically after the end of the 8-week period after you take out the loan. And borrowers will work with lenders for the covered expenses. So you'll basically submit a request to your lender that is servicing the loan, and you'll include documents that are going to verify your full-time equivalent employees, the pay rates, payments made on, your eligible mortgages, rents, utilities, etc., and certify the documents are true. And then the lender has to make a decision on the forgiveness within 60 days.
Yeah.
And so this is, again, all fluid, but that's what you'll find out 60 days from, after you submit for forgiveness, whether or not it is forgiven. If not, payments begin, and it's at that 1% interest rate.
Yeah.
Okay. Let's talk about for just a second. I want to make sure to touch on this. So what you certify for the loan. So in order to, as part of your application, you're going to make a good faith certification.
Yes.
You're basically certifying that current economic uncertainty makes the loan necessary to support your ongoing operations. So you're certifying economic uncertainty. I feel like everybody checks the box on that right now. And the necessity part is the issue that is like more of a judgment call. Is it necessity? Like it's up to you if you know that or not. But I find that I think this group is more hesitant to access the funds that are available to them because they feel like they might be taking something from somebody else that could be in need, and they're not sure. And I want to take this time to encourage you that yes, you apply for the loans. Yes, you need it. Even if you don't think you need it, you probably need it. I'm here to tell you that you very likely probably do, and you can leverage it. And even if you don't use it, and I'm pretty conservative about. Yeah, I'm pretty conservative about taking on debt and doing different things as well. But like, this is cheap access to money. And so I'd rather you have a very low interest emergency fund cushion that you can pull from than not have anything at all. So I think that's the thing to keep in mind. And then you're certifying that you're going to use the money to stay in business and to maintain payroll. So one of the things also is like, you're not looking to use this money to like expand. Like, don't go lock yourself into another lease or try and move office spaces. Like, now's not the time for that.
Don't buy a company car.
Don't buy a company car. But you're certifying that you don't have any other loans under this under the program as well. But that's the biggest thing I think is I just want to take a minute to, I think that this group in general is like, you need to put on your own safety mask and gloves first. And I think there's a tendency not to in this group. So if there's grants available that you can get access to, if there are loans available that are low interest rate, like this group, you need them and you deserve them. And they're there to help people like you, right? There's going to be other bigger companies that are going to take access to this too. And they might be in an okay position and they're going to be okay. And they're going to take access to the funds as well. So this group, I think, needs this money, can use this money and for the good that you're doing in the world. And I want to encourage you to be aggressive in pursuing it and working with your banker and finding out, how to go about accessing the funds.
Thank you for saying that. That's important.
Yeah.
You know us well, us therapists.
I don't know what you're talking about. Okay. I think I did like a high level run through
Okay.
of these things. We can look at the questions too if you want.
Well, I have some questions. So just to clarify, so a lot of people are solo practitioners. They may have an LLC or an S Corp, but they've only paid themselves through dividends. They've never done payroll, which means that they pay payroll taxes. You guys, taking a draw is not payroll. Payroll is where you pay taxes on that amount that you take out, payroll taxes and things like that. So if you are a person who is not on payroll, you own your own business, you're the solo practitioner, then it's probably just the EIDL. I mean, just the grant, no. Or you can do the PPP.
You can do the PPP. So if somebody doesn't, if they're an LLC and they're not on payroll, I mean, they work with your CPA or your financial planner on that, but that does not necessarily, like, you could still have you still have net income of like $150,000 through your practice as a sole proprietor, and or $100,000, you know, and so you can get up to, if you're thinking that, I think it was let me do my math really fast. I did it earlier, but I want an exact number now. So if you make up to $100,000, that's actually a loan of $20,800, $833 that you could get through PPP. So if you got the $10,000 grant, you could still apply, get the PPP for $20,800 based on your net income.
Net income, yes.
Net income, which is, I'm saying, if you net $100,000 from your business, not if you gross that in. If you net that, you could apply for the loan over here. You're just not going to get the full $20,000 forgiven because you already had 10 over here.
Yeah.
So you'd have to pay back 10 at some point in time. But you can apply for both and show that you need, that you have the need for the funds or whatever. So
now, in a lot of group practices, Miranda and I really try to coach people to have employees, not contractors, just in terms of, like, in California now, you have to have employees, but we have people that have it across the board. So if you are a group practice owner and you have contractors,
if you are a group practice owner, go ahead.
Go ahead. No,
you go. I didn't know if you were wanting me to fill the sentence. Or
no, the contractors on their own can apply for these loans because they are their own business entity. Correct?
Correct. So basically, if you are an independent contractor or gig economy worker, that's like one of the big questions we're getting. Yes, you can apply. So sole props, independent contractors, they're eligible. You basically need to submit documentation as basically that's necessary. So you'll do a form, a 1099. So if you're 1099 them, they'll need to submit that. They should have their own bookkeeping or income and expense that they can show demonstrating their income. And if they don't have any of that documentation, then they're going to have to go back to, like, their bank accounts and show deposits and bank records. And so that's on that. So they will not be able to, you basically can't include what you're paying them in your amount.
Correct. So this is why it's very important, if you work as an independent contractor, to have your books in order. And if you have not done books before, you can go ahead and go back and upload those statements and get your books in order, so you have your P&Ls and all of that.
Yeah, that is something. If you don't have your books in order, which I didn't touch on, like, this is the time you're going to need to have them in order before you apply for these items. You'll need to know what your net income, your gross income is, and so if you typically should have it done for taxes anyways. I know the tax deadline got pushed, but you do want to spend your time in getting those organized, because if you don't have clarity, you're not going to be able to submit the documentation to apply for these loans. Like, that's the number one thing, is being able to look at a profit and loss or an income statement. So that's a start there. Start doing your work. I mean, Greg is a great resource. There's QuickBooks, different things, but that's where, before you even panic about any of this, like, that is your number one place to start, because you have to have clarity on the numbers in your business before anybody will actually apply, like, give you money or say that you're an okay risk to give a loan to.
Right. So can I just do a recap? So the EIDL, you can get a 10K grant, up to a 10K grant. You can get more, up to 2 million. Is that what you said?
You can, yeah. You can get more.
There. Mm-hmm.
Am I good?
And that is at an interest rate of 3.75%. The grant obviously does not have to be paid back, but after that 10K, you have that.
Yes.
And that's always been in existence. It's been around.
The EIDL has been in existence. And the thing is, you can apply for the loan through the EIDL, and you can check the box for the grant, and they can give you a loan for more than that. And you don't have to take the money. You don't have to offer to take that loan. You can So that's
right.
Yes.
And then the PPP has 2 application dates. One is today, the 3rd, and then there's one next week for different types of businesses, correct?
Yeah, I was just talking about like what is it? Sole proprietors and self-employed. And like, what's the
It's not the clearest thing.
Not the clearest thing. And so like I would just anticipate that by next week, these ones that are supposed to be open on April 3rd already, and like everybody will just, I mean, it's just I think everything's behind. Like banks are going to be on their own time because banks again are like leveraging. So there are the 2 different application dates, but as we're seeing with today's launch, I mean, stuff might open over the weekend. It might open by Monday. But again, like I said, just stay like wherever you bank, stay in contact with them because they're going to be your best resource to figuring it out.
And your other great resource is not just Mary Beth doing this Facebook Live. You need to talk to your accountant, the person who does your taxes. They can help you understand your payroll reports. They can help you understand your gross receipts. They are the ones who have intimate knowledge of your business.
Yes. And I want to mention, if you're using Gusto for payroll, I haven't seen it. I used to use them. I haven't seen the reports that are coming out, but Gusto has created a great report that you can use that shows your payroll over the past, I think it was 2019, and they just revised it for this new guidance that came out. So it should be like over the preceding 12-month period, it shows you. So that is like basically the paperwork you need to be able to show your payroll. So if you use Gusto, it's kind of like done for you there.
Right. So you want to reach out to your bank. You want to reach out to your accountant. You want to apply for both of these. We don't know how long this is going to go on. We don't know the long-term implication, but if we can get grants to keep our doors open, that means better healthcare for people, increase access, keeping our staff employed. This is good for our businesses, and we should be doing it. Yes? Yes.
Yes.
Mary Beth.
Kelly.
Take a breath. It's a lot of information. And you guys, if you're going to be watching the recording of this, just know that after this, you'll probably go Google and something may have changed. I mean, something could have changed in the 45 minutes that we've done.
It probably did. It probably did. I mean, I'll say I have a whole, I have a Google Doc that I've been compiling, and I think I have like 8 different resource links that I've been going off of. And I put my whole Google Doc together, and then Abacus. So I have Workable Wealth, and then I'm Chief Marketing Officer and Advisor at Abacus Wealth Partners. And we just it came like an hour ago. Our CFO went in and dumped a whole bunch of stuff in our company chat. So it's changing like every little bit. And so I think that's the interesting thing is when you're feeling panicked, there's no one single source for all of this. And so that's where you want to lean on the experts that are in your life. So that your CPA, your existing bank, those are the people you can go and do the research on your own, but reach out to those people and find out what your options are. And just know that there's a ton of information out there, and that even our industry is still trying to get our grasp on it. So it's just the best thing that you can do is contact people that you're connected to, and then make sure that your books are in order, because those are the places to start. And then kind of if you haven't already reworked your budget, I'm sure you guys have talked about all of those things. But there's a need for your services, so it's mostly just trying to get through. I do know from the call I was just on, the big thing is I think a lot of companies, some people feel like they're still okay because the payments are coming in, because the payments are delayed, right? So everything payments are delayed by insurance companies a month or 60 days. Yes. And so just knowing, even though you feel okay right now, and you might be telling yourself you don't need this loan, you haven't actually seen the impact yet, because the payments and the people who are getting laid off, that's all delayed and going to impact you in a few months. So even if you are telling yourself don't do it because you feel okay, still do it, because you just don't know.
And then if you don't need it, because we are seeing some practices who are still booking the same amount of sessions, all these kinds of things, you at least have this emergency cushion, as Mary Beth is saying, and you can give it back.
Yep.
You can just say, here, I didn't use it, but it's nice to have the cushion. A lot of therapists commonly do not have a business savings account, though that's something we really emphasize in boot camp of in the cash flow process, setting aside first your 3 months of business expenses, then getting up to 6 months. But a lot of people commonly don't, especially when you're starting out. And so these are things that can help you, protect you, and hedge your bet for the long haul here as we start to face changes in our economy and just kind of just changes in our life overall.
Yeah. And I will say I have not dug into the CARES Act in general as much, because I've had a lot of stuff going on. But the CARES Act in general, I think for this community, looking at the checks that are going to be coming at some point in time based on your 2018 or 2019 taxes. There's the student loan interest. I would look into that as well for some people. And there was something else that I want. Oh, and then basically your tax payments aren't due until, sorry, I've been doing July. What is it? You guys probably know. July now. And then the first quarter estimated are also due in July 15th. Yeah. So kind of like those are things that are meant to help your cash flow as well. But just know if you're taking advantage of those, like you still have to pay at some point in time. So we'll catch up with you. But there's provisions there that could, if you're struggling on a personal cash flow, look at those options as well.
And there are a lot of people that have like concerns about what can I use this money for? Again, this is to keep people employed and to keep your operational expenses. This is not additional expenses. This is not silly spending. This is keeping your lights on and your doors open. So your rent, your electric bill, those kinds of things.
Yep. Perfect.
That's what we're looking at. So, you know, really what it takes to operate the business and keep it going right now. When you're thinking about, can I apply that up to 25% of that PPP? Remember that it doesn't mean a shopping spree. This is, you have to, and you will have to show proof of where that money went and that those expenses were essential to running the business.
Yeah. So, yeah. To get it forgiven. Yes.
To get it forgiven. Yes. So Mary Beth, thank you so much. Thank you for everyone being here and asking your questions. Again, reach out to your accountant. If you have a payroll company, they are on it. Gusto, for example, has got reports. Everyone's responding. This is going to change from day to day. So thank you for being here, and I appreciate it. We'll see you guys later. Bye.
Bye.